Welcome to a Friday live stream. Um, I usually live stream twice a week, so nothing's going to really change there. I think it's just the days. I think I might have to alternate week to week. So, like this week was Thursday, Friday. Next week will probably be Monday, Tuesday. But I have been able to record these sessions without my laptop crashing, which is a good sign. So I'm going to keep trying to do that. Until I have more, until or if problems do arise. So, Mickey, that's a great question, man. How do you deal with greed? You know what? Today, I actually experienced greed. I should have been hitting the sell button like I normally do, and for some reason I didn't do it. So I'm gonna walk everybody through what happened, and I'll show you how I did deal with it. Because the only way you can really deal with greed is by experiencing it and then journaling about it and then kind of remembering that feeling, right? Because sometimes we have greed and we don't take profit, and then price goes to stop loss, or maybe it hits you out at break even, or maybe you take a small loss. So for me today, I should have taken some profit off the table on my first trade, and then I should have set my stop loss to break even, and then I would have been out. But instead, I didn't, and then I thought maybe it'll go back up, and I'll definitely take some profit. But it ended up closing below the IFEG, so I decided to just cut the trade with a half size loss, which I'll show you in a sec. But yeah, I think it's just experience, man, to be honest with you. So yeah, appreciate everyone's time today. I don't want to keep everybody here for hours and hours and hours, so we'll try to be pretty quick about things. If you have questions, drop them in the chat, and yeah, let's get going. Jort, what's up? So yeah, did anybody take any trades today? Anything? Because I think there was some unicorns across the board, if I'm not mistaken. Maybe not on NQ. I think there was a pre-market setup, but let's check it out. So I think there was something in the morning. I think I saw Ash posting about it. Not sure if he took it or not, but let me just turn this IFEG indicator off for a sec. Okay, so I think it would have been right about here, actually. Okay, so Matt took a CISD setup on the 50. Oh, on the 50-minute. Wow, with SMT. Yeah, SMT is pretty good. Everybody understands SMT, just for the most part. Took a long Union YM. Oh, interesting. You know what? I've looked at YM, but I've never really. I think when I was kind of trying to trade, nothing really worked for me. So personally, I just decided to not trade it. But I was using it at one point as Confluence or some sort of I used it in correlation, similar to how we use ES with NQ. I used also YM with NQ. Long on gold just before the dump. Reggie, yeah, I saw that post you made, man. Yeah, you got out at the right time. God is good, man. Yeah, so basically, Matt was showing this unicorn, and there's a good lesson to learn here, because I mean, in the past couple years, I've seen setups form pre-market, and they look absolutely amazing. And sometimes you FOMO into these positions and you start breaking your rules, and then price doesn't do what you thought it was going to do. And then sometimes you get situations like this where price does do what you thought it would do. And then this is kind of the issue here, because the setups that do play out that you don't take give you FOMO. So the next time it happens, and you think to yourself, oh, last time it worked, so I'll try it this time. And then sure enough, you get blown away. And then you repeat that cycle, right? Because then it'll happen again. You don't take it. It goes to TP. You FOMO. Next time you try it, it fails. I swear this is what used to happen to me. But I think it's important to understand what your rules are. It's good to identify things, but just be careful with your goalposts in terms of your time. Like, do you trade 9:30 to 11? If that's the case, then don't take anything before New York Open, right? Just taking a look at the chat for a sec. C2, nice expansion. Yeah, that was a strong move when you look at it from the 50-minute time frame, eh? And that definitely, yeah, it looks like definitely a CISD setup there because there wasn't much time, right? It's actually pretty good close. Just and the reason I say it's a pretty good close, I'll show you why. Because if you see where it closed pretty damn close to the CISD. I mean, that's what you want. You want entries to be as close to the CISD as possible if you're playing that type of a setup. Because if this thing had closed way down here, you would be too close to London low, and who knows what could have happened, right? But I mean, the expansion is just, I mean, it looks obviously larger because it's a 50-minute time frame. There's a lot more price action happening. But yeah, looks like that was the setup in terms of what Matt was doing from earlier today. And it looks like maybe a couple of you also caught it, or maybe one of you caught it. Not sure. Sorry, I just pulled up the chat again. Accidentally closed it for some reason. Tracy says, let me catch up here. Tracy took CL Bears continuation unicorn from the previous day. Okay, previous day EQ. Took early profit, but it did bounce off the daily EQ, then went back to Wick, the previous daily EQ, and bounced around, it looks like, right? Also love the checklist indicator you shared. Perfect. I'm happy that it resonates with you. I think it's a very handy thing because we're putting our rules in front of us, right? That way there's no mistake, right? You can't forget, right? You can't forget what's A+ and what's not A+. So let me walk you through what I did today, and then we'll go through the other assets, CL and GC. And once again, just throw your questions and whatnot in the chat. I'll try to keep up with it as best as I can, and comment accordingly. Appreciate everyone sharing their charts and stuff. Like, that's so cool. I mean, great job. That's amazing. Yeah, so it's interesting that Jort just shared this IFEG on the 1 minute time frame. And over on the premium side, I was having a conversation with one of the members there in our NQ thread, and he also trades IFEGs with me, and he was pointing that one out, and he did take that, and he took his TP at 2R, and then of course the whole thing just rolled over, of course, as we know. But I'll tell you why I didn't take it. Okay, so first off, I loved the liquidity. The buy side liquidity up there was amazing. This was the buy side liquidity right here. So we had our liquidity sweep that occurs literally at the open. Beautiful stuff. But I'll show you why I decided to stay out. So we get that sweep, New York open. Now, when price started to make that move higher, I was like, okay, that's cool. It's making a move higher. I know that there's this FEG here, or IFEG is what it ended up turning into. Let me just mark it for everybody. Okay, so there it is. So here are my issues, okay? First issue is price is so far away from this IFEG, number one. Number two, I've discussed this previously, but the size of that IFEG is only 3.75 points. For me, I like to see 5 points minimum. The IFEG is also, once again, quite a distance away from the swing point, which means I ideally would have preferred to have seen it like a FEG form here, and then a nice clean swift move through that FEG to confirm the IFEG. But just because what I want, doesn't mean it's going to happen, right? The reason I'm saying what I want is because that's what I'm looking for, right? That's what increases my probability to win. Doesn't mean it won't work. And in this situation, it was a great example of a setup working that I personally did not enter, and it didn't fit my rules. And that's okay. I started moving up to higher time frames. I thought, well, maybe if I go up, because I talked about this before, if you don't see what you want on the lower time frame, just move up one, right? If it's too messy, maybe it cleans up. So I kept going higher and higher, and it kept looking like this. And I thought, oh, this is not good for me. I'm just going to steer clear of this. But lo and behold, price ends up just absolutely crumbling. So when that happens, Are you going to have FOMO? Are you going to try to catch this and start doing things that go against your system? So for me, if I'm trying to, trade a IFEG reversal, I mean, if the reversal doesn't form at the point of interest that I want it to form at, I have to just sit on my hands and wait. And it's unfortunate, but that's trading, right? We can't rush the process. We got to just wait. And we got to also remember, the session just started. Like, my hours are usually trading between 9:30 and like 11:30, right? You can see my New York kill zone ends at 11. The reason I push it to 11:30 is because sometimes these, the New York kill zone high and the low of the day can actually work as a higher time frame POI, even though it might not be technically a H1, buy side liquidity or sell side liquidity. It's still a form of liquidity, and there can be a setup there too. So I often like to trade a little bit later, past 11, just to see what happens. And in a situation like today, I thought for sure, I say for sure, but that's the thing, you never know. As price started to come lower and lower and lower, my trades were in this pocket here. But as price started coming lower, I was waiting for this thing to sweep previous daily low. I just thought, we're so close to previous daily low. Come and give it to me, please. Just sweep it. It'll be so clear. And then if the setup forms, it forms. But price ends up sweeping some sort of an hourly level. If I move to a higher time frame, and I'll talk about that setup in a sec. But I want to go over the first two and also talk about the greed element. Mickey says, that's what I have trouble with the most. It's what I want, not what the market is showing me. Yeah, and I mean, over time, the market humbles us all, right? And I think it's one thing to kind of have a projection of what you want to see. There's nothing wrong with that. I think that's actually super healthy, because what that's doing is it's getting your mind to start pre-planning about a potential scenario that fits your plan. So for me, I was like, okay, when price started to dump, the first thing I started looking at was, okay, well, where is the daily EQ? Because I use the daily EQ to form my bias. If it's above the daily EQ, I'm looking to short. And if it's below the daily EQ, sweeping liquidity, then I'm looking to long. And I want to see that daily EQ hold some sort of support, if you will, in this case, right? If I'm trying to go long. And, that's exactly what ended up happening is price dumps, right? We crashed through London low here. Here's Asia low. And then here's the daily EQ. And I thought, okay, this is great. I'm looking for a V shape. Okay, I'm just looking for a move like this and like this with strength. The second I see, momentum and strength off that location, that's a big part of my system. And let me just increase the size on this again. I did yesterday. Is it working? By the way, anyone having issues with Twitter today? Notice my Twitter's been acting really weird. So right here, right? So premium discount, New York kill zone, major liquidity sweep, right? All that's there. Instant reaction from this level, strong momentum confirming the IFEG. So when I looked at this move here, I mean, this is a pretty good V, right? So the IFEG is literally right here. And the way I traded this thing was I waited for this to close, and literally in the last few seconds of it closing, that's pretty much when I market order entry in. My stop loss was going to be literally at the low of that candle, just because of what was happening there. And I'm just going to measure this. I think this was, yeah. So see how this is 6 points, right? So it's a little bit above 5. That's good enough for me. Check that box. I was like, okay, cool. Let's rock. So I'm in the position, and remember, I like to trim immediately around like 20 points. So I was looking about like right here, okay? And when price started to do kind of this barcode thing a little bit here, and then it shot up, I had my finger on the sell button, and I'm not going to lie, that's when I started to experience that greed element, because I thought, oh, we're so close, and maybe it might shoot higher, filling some liquidity here, because I still see some liquidity up here. I thought maybe it might sweep higher, and then I might get a better sell on that TP1. And then I'll just aggressively move my stop loss to break even. And then sure enough, the next candle like ripped right back down to entry. And I thought, okay, well, I missed that. So this thing's going to end in one of two ways. I'm either going to hit stop loss, or I'm going to see some profit, right? And then as the trade started to play out, there was a third option on the table. And the third option was to just cut the trade, because I should have taken TP a little bit early here. This is the thing with why I said with limit orders and why I don't use limit orders to skim profit. Because if I had a limit order set here, right, I would have got front run. And this is why I like to market order. But the problem with the market order is you still have to fight your own thoughts. You have to fight that greed. You have to, all that stuff that's that pops up, and it pops up randomly too. And I knew I should have just taken that profit, and I usually take like 50% off, and I move my stop loss to break even, and then I see what happens. So this trade technically should have been TP1 hit, stop loss to break even, and then immediately stopped out at break even, and then that's the trade, right? It's over. But that did not happen. I'm still in the trade. Trade starts to move. Let me move this over. And as this thing started to pop again, I had another thought here. Maybe I should just move this to break even. And then once again, the greed came in again. Believe it or not, it came in again. I got greedy again after all this. And I did not move my stop loss to break even. And then I just see the price rolling through. And then the second this candlestick came through, I thought, oh man, you know what? I'm an idiot. I'm an idiot. I should have done those two things. Take profit, move my stop loss to break even, and now I'm going to pay for it. So as this thing closed, I thought, let me see what happens on that next candle, because sometimes what we see is like a fake out, right? Where price goes like this, and then it immediately reclaims it. So I didn't want to exit just yet. I thought, let me give it one more chance. And when I saw this candle start to move higher, I thought, okay, maybe that like what I'm projecting might actually work. And then sure enough, we get that hard close on this candle. So the second this candle closed at 10.13, I just bounced out of that trade. So my exit was literally around here. So if this is my stop loss, 26 points, I was pretty much out around 13 to 14 points roughly. So like I said, it was a half size loss, and it was a good thing too, because I would have lost the whole thing had I not just taken my position off. And this is a lesson to be learned, right? So I've explained to you all the things that kind of go through my head as this trade was actually playing out. And a lot of the reason why I'm able to express it this way is because I journaled everything I'm talking about. So I had time to process. I had time to analyze each candlestick as I saw it, as like I remember it happening. And then just recall what I was feeling and be honest about it. And that's the beauty of what we're going to do with the 28 plus trade challenge, is just trying to be honest with yourself, right? Like if you're not honest with yourself, you're just going to, you're just going to kick your own ass. So Ashley says, sorry for interrupting. Oh, you can always interrupt. No worries. Sorry for interrupting your explanation, but just want to say the daily EQ genuinely helped me a lot with the trades today. And you see why you speak so much of it. Oh, you know what? That's amazing. I'm really happy that something that we're talking about today and yesterday is working. I mean, and I said this yesterday, but like, if you have things on your chart that are not doing anything for you, then why do you have that on your chart, right? So for me, this is a very huge level, and it's obviously doing something for me. That's why I have it. So I'm happy to hear that it works for the way you're trading too. All right, what did George share here? My two trades, 30-second IFEG at the standard deviation after a 4-hour FEG got run. Yeah, I mean, you're showing the power of the IFEG, in my opinion, and I think it's such an amazing entry model, to be honest with you. But I do think it just requires patience. And yeah, the EQ is free, man. It's right here. No duplicates, interval, rangey, and EQ. It's free indicator. Just search it. I have everything turned off. The only thing I have activated on this, and I might as well just show you, The only thing I have on is the daily levels EQ. That's it. So I know Tracy was mentioning previous daily EQ. I mean, you can experiment with that. For me, I just need that one line. I'm happy with this. That's all I need personally. So that was the first trade. Okay, so that goes on. I'm like, shit. That should have been a profitable trade, but it ends up becoming a half-size loss. Okay, so that's fine. What do you do when that happens? I'm curious. What do you guys do when you make a mistake like that? What do you do? Do you turn off your laptop? Do you regroup? Do you FOMO? What do you do? I'm curious because I can't be the only one that has this happen to them. I'm sure this happens to everyone else, unless I just suck and you guys are all amazing. Yeah, actually, that's the whole thing. We have to find filters that work for us, right? If you don't have a filter to keep you safe, then you need to find those things. For me, this is such an easy mechanical filter, right? Above the daily EQ, I short. Below the daily EQ, I'm looking for longs. If I'm actually taking a trade that goes against that, and I have my checklist right here, right? So if I'm not trading on the right side of premium and discount, if I take this off, my probability is now moved from 100% in terms of me following my plan to 83%. That's why I like this, because it's visually showing me things that are going to speak to me. Ali, what's up, brother? What's up, brother? Good to see you, man. So you're saying you would try to get in again, but you'd be very hesitant to take another one? Cool. George says one loss is the laptop out, meaning just probably shut it down. So I used to be a one and done kind of guy too, and go to the gym. Yeah, for sure. So for me, I'm more on the... So there's two ways I go about this. The first way is like a dollar amount, like risk. So if I risk... I'm just going to use a general example. Let's say my overall risk for the day is $500. That means I cannot lose more than $500 in one trading day. That can equate to one trade, two trades, three trades. It doesn't matter. It just depends on how my sizing goes, right? So that's one thing. The second thing is if I do take that trade at the first trade for, let's say, $250 and I lose $250, well, guess what? I only have $250 left, which usually just means I have one more trade left to take in the day, whether it's a winner or a loser. So for me, if I take a loss, typically what ends up happening is I'll try again and see what happens, and then go from there. Very rarely am I going to jump into a third trade on a funded account. Usually if a third trade sets up, it's like I'll just take it on an eval and see what I can do there. But if my first trade is actually a legit winner and I feel like I hit my daily goal, so my goal typically in a day is like, to get over $300, right? If I can get over $300 in a day, I feel good. Like I'm making progress to my accounts. So if I get to that amount, then I'm good. This trade, if I even had taken profit off here, this would not have been 300. So that means that this second trade I took, I would have still taken it. Okay, so regardless, though, the reality is I actually lost half size. So I was going to take this trade no matter what. Let's talk about the second trade. Let me just hit the rewind button just so we can just come back here for a sec. Now, I just want to show what levels I was working with. So you have a H1 or an H4 sell side liquidity level that gets tagged here. And I mean, it tagged it beautifully, right? Just beautifully. Of course, as price starts to go down now, you can see what's going on with the daily EQ, right? It's also going to start moving. How much do I risk per trade? Anywhere between $200 and $400 per trade. It just depends on how good I feel about the trade. And then it also depends on, like, the time. So, like, if a trade... usually we know the manipulation forms at the top of the session, right? So at the top of the session, I'll typically try to risk a little bit more because I know that the manipulation will occur and maybe I can get that reversal. So you can see right here, right? Like clear manipulation. My setup unfortunately didn't. I mean, the setup's there, I guess loosely, but it's not fitting my criteria 100%. But in a situation like this, I would be risking $300 to $400 because it's right at the top of the session. It's immediately sweeping liquidity. I would take that chance here with more money. As time starts to move on, well, I'll slowly start to consider reducing that risk, right? So maybe instead of 300 to 400, now I'm looking at like 200 to 300, right? So I usually land around 250. So this trade, like I said, was about 250, half size loss. Tried again here. Now, the thing with this position is you have a series. Well, there's two FEGs here, okay? You have a small one here, and then you have a little bit of a larger one here. So I was using this, and I thought maybe I can just like catch a quick pop, get 20 points, get out, stop loss to break even. And as I was like tracking this thing, so like I sometimes enter early. I don't wait for the candle to close. And sometimes it works in my favor, and I'll enter, like, let's just say this candle was the entry candle, right? I might enter around here, and then literally as the candle closes, I'm already in profit. And sometimes it's already hit TP, which is great. But in other situations like today, where I enter literally around here, okay, and this up a little bit, right? So entries there, stop loss. I think I had placed it around here, if I'm not mistaken. And I was literally just, targeting, max target would have been the daily EQ up here, right? But I had my TP set for TP1 around, 20 to, 30 points roughly, right? So you can see here on that first candle, it's already hit 22. And the thing is, I got lucky. I'm not going to lie, because this candle actually didn't confirm the IFEG. And I entered, so it was very risky, but that's just how this game is played, right? Like we have to kind of know what we're dealing with. I just thought this level is too good to be true, the way it's holding up, and I really liked initially that response after such an aggressive move lower. So I thought maybe I can just catch a quick blip, and if not just get break even. Maybe this thing turns into a monster. You never know, right? Anything's possible. So TP1 here, stop loss goes to break even, and sure enough, this is how quick you got to be. The second I took that TP off the table, my stop loss moved immediately to break even. I'm not cheering for my position. I'm not like patting myself on the back. The trade is still on. Like, you have to be on, because like at any given moment, this thing can just go right against you. And this would have hit stop loss. So I learned my lesson from the first trade about the greed, and I definitely made sure to take profit around that 20-point marker. I immediately took profit, and then I stuck to my plan, which was to immediately move my stop loss to break even. So today, I wouldn't say I ended red. I actually ended up break even, maybe a little green, but pretty much break even for the day. So I'm content with that. And because I ended up break even on the day, I was very reluctant on taking this next setup. So I just ended up watching this thing. So as price starts to move lower, I talked about how I was waiting for price to sweep the previous daily low, right? So let me get rid of this. But as you can see, that doesn't happen. If I go back to the 1 hour time frame, we're bouncing off of IRLs inside here, and here's that level that was sweeping, and you can see price is like holding up pretty damn well here, right? The hourly close, the 10 o'clock candle closed above that level, which is pretty good. But here's the thing. Because it didn't sweep this, and I thought I'm not going to risk it, right? I'm going to wait for this to sweep before I do anything. And also, I didn't really see any IFEGs here. So, but here's the thing: when I start moving up the time frame, right? Look, I move up to the 5-minute time frame. And let me just put that line back in, which is the hourly line. So sell side liquidity. Oops, I'm used to going to the 1 minute. Let's go to the 5 minute. Okay, see how much nicer this looks now? So I'm looking at this move and I'm looking at the reaction, right? Beautiful reaction. Closes through that level there. Now there's two ways to go about this. You can either make a series combining the FEGs, or you can take a chance depending on the size of that IFEG, right? So this one was about 11 points. So, and if I moved it higher, that's like 29 points. So that's too big. 11.5 points, that's pretty good. So for me, if I should have taken this, I think, but I'm okay that I did not. It is a 5 minute setup. The entry literally is on this candle right here. Stop loss can go literally at the bottom of the candle, and then you're just targeting the daily EQ. So as you can see, price literally just kept going right to the TP. So I watched that play out, right? And that's how this thing goes. Sometimes you're going to get perfect trades that have zero drawdown, and sometimes you're going to have trades that are looking like the two I just showed you. Like, it's going to happen. Yesterday I had some amazing luck with the trades. I managed to catch that kind of descent, or the dump, or whatever, cascade. But today it's Friday, and I just watched that, right? Mickey says, that's why I got screwed, thinking we're going to hit previous day low. It's crazy how close we get to the previous day low just to reverse. Now, here's a little thing I'll tell you. If you look at the ES chart, okay, let me open up the split screen. So let me go to the 5 minute for a sec. Okay. So I think it's really important that we should always be keeping an eye on what ES is doing. Why? Here's the reason why NQ front run the PDL. Actually, you can see it, but let's see. Does anyone know why? If anyone's able to chat, why do you think NQ front run the PDL? Anyone know? If not, that's cool. So the reason is because at this exact moment where NQ decides to reverse, front-running the PDL, ES has already swept hourly sell-side liquidity. And this is a big reason why. I mean, we can look at it in hindsight, but this is why I look at ES, because I want to see how price reacts, right? Because if ES is hitting a key level and sweeping it, and NQ isn't, but then NQ is flashing a beautiful setup with strength, like something that I would normally take, that's a go, right? That can be a go. But I think it just comes with some experience, and it comes with some, well-defined risk, right? Because for me, like I said, I decided to not take it because I had already taken 2 trades, and I was like, that's enough. I'm lucky to be a break even. The last thing I want to do now is take a stupid loss knowing that PDL is unswept, right? If this was my first trade of the day, I probably would have taken a chance on it, right? Why not? You never know, because things like this do happen. But we end up seeing a couple TPs hit here, right? You got 20 points, and then you got the next one, 84 points. So that was that third setup on NQ today that played out. So something to keep an eye on. I'm not sure if anyone else kind of splits the screen or whatnot, but I do find it incredibly handy, especially because of the levels. I can see, is ES hitting that level, or an NQ isn't, or vice versa, right? And that becomes very, very important. So that's NQ in a nutshell. Let's take a look at gold. If you have questions, drop them in the chat. No stress. Let's take a look at gold. I think there was a unicorn on gold, actually, now that I look at it. But this is definitely because of Trump. I mean, that is a news-driven dump if I've never seen one. Like, come on. Or if I have ever seen one. Huge dump. But let's see where that unicorn comes from. So 15-minute time frame. We're above the daily EQ. Let me turn this thing off, please. And keep bounced off the previous day close, 10:45. Yeah, you're all about that level now. As long as it's working for you, that's great. Like, as long as it works and you're using it in a way that is going to help you, definitely use it. For me, daily EQ is more than enough. I already have enough lines on my chart personally. Oh, not the EQ. Oh, previous day close. Excuse me. Misread that. Okay, let's go to gold though. So with gold, here is 10 o'clock candle. Here's 9:45. So at 10, we are sweeping all this liquidity up here, right? So much liquidity gets swept right here. Let's mark that off as a 15-minute. Do I even have 15-minute on my chart? Probably don't. Okay, I'll just leave it blank. Looks like they actually already swept it there. Let me just mark it properly. Okay, there we go. And then this one, too high. So there's the level. If you're wondering why I'm not checking out the H4, I'll show you why. If you look at the H4, you have a big barcode. And if you're trying to figure out like your bias from this, good luck. You need to wait. You need to wait for price to go higher or for price to go lower to form some sort of a bias. So if I go to the 15-minute, significantly clearer. Now, why am I looking at the 15-minute? Well, because most of the time, textbook is, we're aligning 4-hour, 15-minute, 1 minute, right? And if I'm looking at this from the lens of a unicorn, I'm going to use that type of alignment. So if I go to the 1 minute, here's the setup. It was really, really nice. So level gets swept. You have a massive move lower. Where is the breaker block? Where is the breaker block? Is it this candle? Or is it different candles? Not sure what anyone would use. Now, I said this was a unicorn, but I'm looking at this now. It doesn't look like it was a unicorn. Maybe it was a 5-minute unicorn. Well, it was definitely a 5-minute unicorn. 3-minute unicorn. 2-minute unicorn. Technically, no. 3-minute. Yeah, I guess the 3-minute does look cleaner, right? Because this series right here. So, and you have the FVG inside the breaker block, clear move lower. But you can see if you're using the 3-minute, there's no entry. If we go to the 2-minute, there's an entry right there for you, right? If you are going to front run the unicorn itself. But it looks like even if this closed up here, this candlestick, which would have, so you get the let me move this over. So you get the confirmation of the unicorn here at 10:20, and then 10:22, it does tag that lip of the breaker block. So there is an entry there to be had. Now you'll notice the way I kind of do breaker blocks. I mean, the technical way, we've all learned is we're using the low, in this case, because it's a short, but, we'd be looking for the lowest down close candles before the leg that takes liquidity, right? So, and if it's a series, you block that off. So technically it'd be this, right? But if I use this, the FVG's up here, but here's the whole swing coming down, right? What I do is I'll just do this, and I'll just make that slight adjustment because it doesn't have to be perfect, right? It doesn't have to be perfect. Imagine if you were actually trying to trade this properly, like technically to the T, and you don't enter this, even though you should be entering this, but you don't because of a technicality, and then you see this happen. That's enough to make you want to flip your desk. So this is what I'm saying. Like, throw out the laptop. This is what I'm saying. Like, it's okay, and when it comes to breaker blocks, in my opinion, it's okay to, stretch what it is, right? Because this is super obvious, right? This is a whole entire leg. Like, why would you just place it here, right? Just move it up. It's okay. Your stop loss is going to be up here anyways. So it's, most likely at the swing point, it's protected. So why not? But anyways, that's GC. And another cool thing about GC is, like, I just want to go back to the daily EQ, but like, look at how price is reacting off of it very nicely. And obviously the PDL's right here. It's been played out, but it's still in effect. Daily EQ for the win. Let's take a look at CL. think CL had a unicorn as well. Let me just double check my notes. CL. Yeah, it did. And it's right. Well, once again, let's just go back here, rewind this thing, see where the EQ is. Yeah, here once again the EQ. So if I go to the 15-minute, actually, let's go to the 4-hour. And once again, it's that same. It's the same problem I've always had with trying to figure out daily bias, which is why I personally don't use it like the way maybe other people use it, because like if I was on the H4 and I'm trying to figure out what my daily bias is, I actually would have had a long bias, right? Because I would have said, well, we have a H4 sweep, so I'm looking for price to move from external to like right here, right? Internal. Right? I want price to move from external to internal. So I have a bullish bias. If I go to the 15-minute, now I need to find a line structure with that, right? So here's open, 9:30, price moves lower. Once again, I just want to show you the daily EQ. It takes out so much of the thinking for you, because I found the daily bias using IRL or ERL to IRL. Go to the 50-minute for market structure. Does it hit some sort of bullish POI? And it does. When price dips here, we have liquidity here. And does it actually tag this? No, it doesn't. So FVG gets tagged here. Let's just mark this off. FVG. Lock that up. So we're right here, and the daily EQ is right there. Perfect. Go to the 1 minute. And let me just hit the rewind button. Yep, I'll add that EQ level in just a sec. Okay, so here we go. Price dips down. Here's the FVG, the higher time frame FVG. Notice the respect. Nice sweep. Where's the unicorn? So we're looking for the highest up close candle or series of candles before the leg that takes liquidity. So we're looking at this candle right here, right? So what I often do, once again, is even though there's a candle right here, kind of breaking up the series, I just usually do this. I'll just do that because it just seems more obvious to me. And by doing that, what it does is then this volume imbalance can also serve as my it can also serve as that FVG inside the breaker block, right? Let me just adjust the setting on this. Okay, so now you have a unicorn, and if you're using ERL to IRL, it's aligned. If you're using just simply the daily EQ, well, it's also aligned because you got that sweep that happened here, right? So we can catch that reclaim. That's okay. And then, of course, we have that 50-minute POI that's working here. So let's see what happens and how it plays out, because price runs away, it looks like, never actually closes here at 10.12. This candle confirms it at 10.13, but you don't get a entry until this McDonald's pattern shows up, and it's 10.31. There's your tag. Let's just move this over. Okay, so there's your tag. Now, in terms of your stop loss, when I used to trade CL with unicorns, I used to use a 3-point stop loss. So my stop loss would be, like, I would set it up so that it's under the breaker block. Then I would go to the long position tool because we're going long. I'd go to this stop thing and I would just move it 3 points like that. And now my stop loss is 3 points below the breaker block, and I would literally have just been trying to aim for 2R, right? That's typically what we've all done trading unicorns. So if I hit play, the thing came right back to entry, eh? Wow. and then goes to TP. Crazy. Yeah, no problem, Alaman. No problem. So there's the unicorn on CL. Really nice. Was it a C2 unicorn? I have no idea. Let's take a look and see. Let me drop a line here. Let's go to the 15. See what it looked like. Yeah, so that would have been a C2 unicorn for sure, right? C2 meaning that the sweeping candle, which is our C2, sweeps C1, and then C3, C4, etc. becomes expansion, which is what you see here. So for those that are looking at those concepts, it was there, it was present. I think when you're trading these types of patterns, once again, you got to have a lot of patience, right? I mean, how many of you would have put your stop loss to break even here after price went up here and ran, what would that have been, 1.5 almost? How many of you would have put your stop loss at break even? If you did, you would have got tagged out, and then you would have watched price go all the way to TP. So I find when you're trading these types of unicorn models, you got to really set and forget, really. This thing actually even go up? Oh, man, it's played around. Oh, there it is. Okay. Oh. What time would that have been? 12:17. How many? Wow, that's a long, long time to hold a position. Hour and 47 minutes. Do you guys hold positions that long? Let's put on that level Tracy's talking about. Yeah, do you guys hold positions that long? I'm just curious. Because if you do, and you can withstand this, like, that's going to build your nerves, right? Or it's going to turn, your blood to ice. You're going to be cold-blooded because you're going to have no emotions or feelings after that if you keep doing it that way. Walk away, yeah, that's a smart way. The reason I don't walk away, though, is because you see how this candle comes very close here, and it's 11:21. I definitely would have taken profit there, right? Now, looking like it's over 2. So here's 2. Actually, this would have been closed here. My bad. Had that marked incorrectly. I was looking at the New York high. So that would have been 2 hours. So that's what I was saying. Like, I wouldn't have waited to go higher than that. I would have just taken it there. But it looks like that would have been 2 hours. So forget what I just said there. But yeah, holding trades for a long extended period of time, that will definitely... 51 minutes? Yeah, I mean, that's still pretty good time. Okay, let me add that level in quickly. Where are we? As I do recall what you were talking about, the EQ. And I'll just make it, I'll also make it yellow. So you got 2 there. Previous daily EQ, and this is exactly what Tracy's talking about, right? Like, it's just ping-ponging. I'm not sure what it looks like now. So the beauty is that previous daily EQ is going to be static. It's not going to change. And you can see it does come into play. So, I mean, this could be a pretty valuable level to use in terms of maybe analyzing price in confluence with other higher time frame levels, maybe. But that's CL for you, right? Like, pretty good. Nice move between the two. Alman wants me to talk more about the daily EQ. So the daily EQ, if I sum it up to you very easily, let me get rid of this for a second. Let me just clear the whole chart. The daily EQ, I used to do this manually, and I mentioned this yesterday on the stream, but I used to do this manually. And the way you do it manually is you get your Fibonacci like this, and you have it set. I mean, I have it set to 0, 1, and 5, right? So, or 0.5, so it's 50%. And all you're going to do is you're going to anchor the low from the start of the day. So the start of the day for Asia is 6 p.m. Eastern. So if I look at where that is, let me just find it. 888, right about here. Oops. Okay, so there's Asia. Do I have a thing for that? Key time. Okay, so there's the start of the day. Asia opens. Thursday starts. What I'm going to do is I'm going to plot my anchor on that Fibonacci at the lowest point of the day, using this as my starting goalpost. So you can see, if you wake up in the morning for New York, that level is actually right down here. Okay, and that occurs at about 1:26 in the morning, which would be a Friday. And then the next thing you're going to do is when the New York session starts, you're going to observe to the left where the highest point of interest was in the current trading day. And the second you do that, your daily EQ is now visible. So what I used to do is I'd plot this, and if price is obviously trading inside of that entire daily range, then you don't have to manually move your anchors because they're set. The price is just trading inside of it. However, if price starts pushing new highs during New York Open, well, then this is when I would have to manually start moving this higher to reflect what NQ is doing. And when that happens, your EQ is going to obviously go higher, right? Because if NQ is moving higher, then you have to keep moving the anchor, and your daily EQ is going to keep moving higher. Now, if I turn this on, you'll see that it's the same level, right? Daily EQ, right? Because there's no new highs here. So this is how I manually used to do it. But truth be told, I got, really sick and tired of having to do it. And it's just like one extra thing to do. And when you're trading and you're already having to, look at so many different things, the last thing you want to do is add one more thing to it. So I started looking for an indicator because I know other people have like private indicators that mark this, but I'm not going to pay for this just for this. So I was like looking for an indicator that did plot this, and sure enough, I ended up finding no duplicates, interval rangey, and EQ, and I was just like, wow, this thing plots exactly what I want. It plots the daily EQ perfectly, and now I don't have to. I don't have to do this step. So even if NQ starts making new highs, it's automatically calculating the EQ for me. So once again, I talked about this at the start of the session. If you have things on your chart, you have to make sure that they're doing something for you, right? If you're using indicators, you should be using indicators to make your life more simple, right? To make your process more efficient. But the thing is, a lot of the things that our indicators tell us, we should also know how to do manually. Because if you can't do something manually, right, and you're relying on an indicator, and I'll be honest with you, an indicator, even like this IFEG indicator, can become very, very deadly and dangerous for anyone, because if you're simply relying on this indicator to give you a setup, you're not going to make it, right? Why do I use it? Because it makes my life more efficient. I already know what I'm looking for at those key levels. I've already showed you this. I've already showed you what to look for. But having the indicator there for me just simplifies my process, and it automatically marks things for me, which is what I like. I like it. I like that it marks the FEG for me, or the IFEG for me. I like that it maps the drawn liquidity levels for me. I like that it maps the buy side and sell side liquidity levels for me, and it gives me alerts. So I already have alerts set on those levels, but it's just nice to have something that complements what I'm trying to do and make my life more simple, and obviously make it less stressful. Because sometimes I actually second guess the FEG that I'm looking at, and I'll use the indicator to kind of gauge what it, like the series, like how it would calculate that data, because it is calculating the data in terms of just based off of its own its own mechanisms, in terms of like how many candles it takes to confirm and things like that, right? I usually go by feeling with things, but it's nice to have that technical, mechanical approach too, because then you can use that to bounce an idea off of, right? Ali says, do you trade gold in Asia session? If so, what does your setup look like? So I have actually, at the beginning of the year, I kept telling myself, less is more, less is more, less is more. I I'm positive I've even posted about this on Twitter just to like remind myself. Let me see if I can even find it. Oh, I thought I had it saved, but I guess I don't. Let me type the word less and see what comes up. Here it is. Perfect. So, towards the end of the year, this is something I had put out for I put it out for more of myself, but I really started to come back to it in January. And, mindset is 80% of this thing. So this is kind of a note I made to myself, really, and I just put it up here so I could always come back to it. But, less exposure to the market, less assets to trade in my basket, less trades to take in a session, less social media distractions, less influence from other traders, right? We're always following people on Twitter or Instagram or YouTube, whatever, right? Sometimes that can be to your detriment. As I've experienced that. I've completely fucked up because of following people. Less indicators on the chart, right? Less colors. Now, I say less colors, but now my charts kind of have a little bit more color. And then less emotions while I trade, right? So the thing is, like, the whole idea here is less is more. So for me, it's a big reason why I stopped trading gold in Asia and why I stopped trading gold or CL during New York, because for me to be successful, I technically tell less colors, less red and less green. That's a rookie chart. I'm just joking. I just know that I can make the amount that I want to make, or that I'll say I need to make, but it's not so much about need. It's more about my goal, right? So what I want to make, I can make that just on NQ between 9:30 and 11:30. And I feel like if I'm doing other things, it's going to distract me from what's happening with the asset I really want to trade, which is NQ. But the question is, do you trade gold in the Asia session? So we answered that. The answer is no. If so, what does your setup look like? I can still talk to you about a setup. My setup would still be an IFEG model. Honestly, it would still be an IFEG model. The problem is I don't know what the hit rate is on this thing. What's up, 1700? I don't know what the hit rate is on this thing, though, if I was to use it during Asia. We could just quickly backtest this, though, just to see what's going on. Let's see. So 15, let's go to 1800. So the thing with Asia is I used to take Asia trades from like 6 p.m. I wouldn't even wait for the kill zone technically to start, right? So I would be looking at 6 p.m. And that's what I used to do. Let me just see if something formed here. And I would just use the same concepts, right? Like, did it sweep hourly liquidity? Did it, like same rules, nothing different. So in this situation, like, this is really, really messy though. But nonetheless, there is a level there. So depending on what price is doing and when that swept, so yeah, you can see right here. Let's take a look at this for a second. So that was that hourly level, H1 SSL, and where's my line? Line. So okay, so 1800 is way up here. Okay, so start of the day is way up here. Okay, daily EQs there. Is there anything here to work with? I don't know. Let's see. So if I'm looking at this, there really isn't much to work with here, right? It didn't really sweep anything. So whatever happens, nonetheless, I wouldn't have technically done anything anyways. But seeing that price is just obviously crumbling, once it hits this level, below daily EQ, okay, perfect. Now I've aligned my bias with the market structure. What am I looking to trade? Well, I'm looking to trade the IFEG. So here's that sweep. You can identify that there is a liquidity sweep here too, right? And is there an IFEG? So let's just hit rewind on this for a sec. Just want to double check that I don't have the custom settings on. Okay, perfect. And let's take that off. So aggressive dump. You see the indicator is not really showing you that there's an FVG here, right? Nice gap there, though. Let's just check the 2-minute for a sec. Let's see if it gets cleaner. So it doesn't exactly get cleaner. Now, would I have traded this? I probably, yeah, I mean, I would consider this a setup, right? So you have a volume imbalance, which I would have just used as the level of interest. Just mark that off as an IFVG, right? Now, the thing with a setup like this is, you see this massive candle? So for me, as this candle starts to open, there's a good chance, depending on how it looks, I'm going to chase into this thing. So my entry would not have been right down here. It probably would have been somewhere here, right? My stop loss would have been probably around here, just underneath this Quasimodo, which is that swing point, or the liquidity sweep level, like a shoulder. And then in terms of targeting points, well, it's the same idea, right? Like, I'm not going to take TP here, probably around here, right? I would probably have taken profit there, which then means my stop loss goes to break even, and then I would have been stopped out. And that would have been the trade. Even though price, you know, often does this, it hits break even and then goes the other way. This would just be like a risk move, right? Like I'm very aggressive with my offense and I'm very aggressive with my defense. But this is how I would have traded this, like the exact same IFVG setups I've been showing you. Like, this is how I would have done it in Asia. Same thing. The only thing that I remember, even when I was kind of paper trading it, was I would only take the first setup, and then anything else was void. So if this is the first setup of the day for Asia with gold, then that's it. Nothing more. All right. So hope that answers your question. Let's go back another day. Hey, no problem. So here's 18 right there. Let's go to the hourly for a sec, see what it looks like. So here's 18. The price just obviously starts to dump. There's nothing here to short with in terms of looking for market structure levels. Everything is down here, right? So there's a level here, and there's an FVG here, right? Also known as a gap, and then we have another level down here. So let's just go to the 1 minute for a sec, and let's observe what we're seeing. So, oh, just missed actually sweeping that level. I wonder, does it actually hit that level? Ah, it does. Look at that. So this is why I like the indicator, because it just makes my life a little more efficient. Because sometimes I'll actually miss marking a swing point like a SSL or a BSL, because it's so small, right? So something like this, for example, I might have missed this, but the indicator will mark it if something starts to present itself, right? So the second price aggressively closes through here, I'll probably start getting alerts here telling me, hey, there's a potential setup because there's an SSL here. And then once this starts to happen, and you can see there's a clear potential IFVG here. If I hit rewind, you'll see it's going to highlight there. So it's showing you there's a potential setup here, right? This thing could work, but you still need to get some closures above there, right? And there you get a fake out, and then dump some more. So this level actually doesn't work. But this is how I would manage the risk, right? Because you can't just enter everything. You got to wait for, proper clarity. Tracy says, so you don't wait for 7 or 8p. Are you talking about points? So when it comes to gold, completely different, right? NQ, I'm looking at those points, but with gold, typically, I'm looking for, like, what I used to look for. I'll say I used to, because I'm not trading anymore, but I wanted to see at least like 1 point, right? Like I don't want to see zero point 0.5 points or 0.8, right? Like I would want to see at least 1 point, but look at how small 1 point is, right? And then if I go up here, like this is huge, right? 8.6 points, that's a lot, right? That's a big move. But when the candles are making big moves, it is what it is. And it looks like you're not talking about those points. You're talking about time. So the kill zone, as everyone knows, is 8 p.m. to midnight, right? But just because that's the case, it doesn't mean you have to abide by that. They talk about volume and whatnot. That's fine. But in my opinion, and if you even look at other traders, I'll give you a hint with one. So Lumi Traders. Anyone know who Lumi Traders is? Lumi Traders, her name is Dasha. So she's really active in Asia, especially with gold. So if you're really looking to trade alongside maybe someone who's trading gold, check her out. She's not trading this. She's trading something else. But I've seen her take trades before the kill zone before. So that's what kind of got me thinking like, hey, why am I waiting for 8 p.m. when the session actually starts at 6? Like, why not see what's happening? Because as I showed you before, like, opportunity can happen. Let's see what happens here. Okay, so let's go 2 minute. That's huge, man. Does that even work? I don't even know. Yep, sure does. So this is a good example, right? Where previous daily lows swept. I was on the 1 minute time frame. There's a series here, but I don't like this, right? This is not what you want to see. This is not showing us strength, right? This is like a staircase. We want to see like an elevator move, right? This is when I would just go up a time frame. And when you go up a time frame, now those candlesticks show more strength, right? More momentum through the IFVG. So if you're entering there, right? Maybe your stop loss is either here, maybe it's down here. Let's just place it here. And then in terms of your targets, well, once again, you know, like this indicator is telling us here's the top of the range, and that's a pretty obvious place to take profit. Does it actually get there? I don't know. It doesn't. This is another reason why I'm aggressively taking profits. Like I can't wait for, like even though the indicator is showing me where a potential drawn liquidity is, like a TP, it doesn't mean I have to wait for it, right? You take TP where you see liquidity, right? So if I see that, you know, there's this happening, let me mark this off for you, right? You see that FVG there, 3 minute? If I start seeing how price, like let's say I was trying to target this, this is exactly what I would do, okay? Daily EQ, TP1. FVG, TP2. Stop loss, break even, already from here, right? Once this level gets hit, which is right there, TP2 hits, stop loss at break even, and then I would have been stopped out right here. This is exactly how I would have traded this. TP3 would have just been up here, full trade. So that would have been a total of a 2R move, 15 points. But what you might end up getting is closer to like 10 or 11 points with 2 TPs. And your stop loss is not touched. So that's how I would have traded. How I would have traded this, exactly this, and how the, you know, in terms of the technical side of the management piece, right? Like how I would be moving stop losses. How do I gauge a TP? Right now with GC, it's a little different than NQ, right? Because it's not like I'm looking for 20 points, but what you can do is start to look at the R factor, right? So like usually my first TP is around 0.5 to 0.7, maybe 0.8. So if this daily EQ measures around there, then that's aligned with what I'm looking for, right? So that's why that's an easy TP1. And then if I'm looking for another TP, I just look for the liquidity, right? Like if there's liquidity here, I can definitely move my position tool a little higher, and now you can see it's already doubled, right? It's now moved to 10 points from 5.5 points, right? So here is 10.5 points. So like it's obvious that you should be taking another TP there, and then if it goes higher, well, you have loads of liquidity up here that potentially could be targeted, and it does get us near that 2R marker. So that's how I would have done this, but you can never trust what price is going to do. I think it took me a while to break the concepts of the 2R idea. Because if I was waiting for this level to get hit, because this looks so freaking obvious, and then this thing just dies, like, once again, I'm going to throw my laptop against the wall, right? So, once again, I think it's just about the dollar amount, right? So, position size accordingly. If you're entering here and your stop loss is here, so, that's a 7.9 point stop loss. What would I use? Let me see. I have a little cheat sheet that I have, but let me just see if I can find it for myself. So 7.9. So if I'm trying to risk like $200, that's about 2 contracts. If I'm gonna risk $300, that's about 4 contracts. If I'm gonna risk that's $300. If I'm gonna risk $400, that's about 5 contracts. So I would go by the dollar amount, not so much about the contract amount. The contract's just the number you have to put in there, because even if I put 250, it's not gonna be 250, right? Sometimes it could be 223, or maybe it could be 268. So it's like a rough estimate, and then you have to kind of decide for yourself, like, do you want, like, if your goal is 250 on this trade, but when you put in the contract size, it puts you over by $15. Are you okay with that? Are you okay? Because, like, if it does go against you and it slips, like, it might not be 268. It might end up turning into like $300 for all you know, right? So a 250 trade idea now turns into a 300 trade idea, right? So for how long do you averagely hold a position? The beauty of trading IFVGs on the lower time frame is you're holding these trades for literally minutes, and it really aligns with me personally. That's why I'm doing it like this. If I show you that first trade setup, let me see. Let me go back here for a sec. NQ. So if I go back to the 1 minute time frame, and we just quickly look at those 2 trades I took. So if my entry was here, right, because it confirms the IFVG, right, and I should have taken profit here or here, right, 3 minutes, TP1 would have been hit technically if I had not been greedy, right, or 4 minutes. And then what happens after that is the trade's over fully 4 minutes later. So the whole trade lasts 8 minutes technically, right? If I let that thing hit stop loss, then it probably would have been around this candlestick, I would think, which then means that trade would have lasted 11 minutes. Take a look at the next one. Oops. If I look at the next one, right, I told you guys I chased on this candlestick, and my TP hits in 1 minute to 2 minutes, and then in the 3rd minute I'm at break even. So that's 3 minutes. So you got to be really quick. You got to really know where your buttons are and what you're doing. Like, I know, like, how, like, you got to make sure you have, one-click trading on if you're executing inside trading view. I've seen other, like, Trade of 8 really sucks to trade on. I highly recommend don't trade on there if you can. But yeah, I'll just, like, let's say I had 8 contracts open here, right? And price immediately moves here. Like, I would have changed this to 4, and then as price goes up here, I just hit sell. And then I cancel off any sort of, stop loss I have and put that back in as a sell stop, right? Or I just move it up and modify the order. Can I ask, what's your experience trading New York PM when you get time to come around to it? Due to my work, it's limited me heavily, and trading has become substantially more challenging. Yeah, you know what? So PM kill zone 130 to 4. That's what you're looking at. The problem with it though is obviously we know volume can dip. We also know that the probabilities start to lower for whatever reason, right? Things don't always work the way we would anticipate them to potentially work during, say, the New York AM session. But it doesn't mean you can't trade. It just depends on what you want to do, right? So I appreciate your situation, and yeah, you have to make those kinds of hard decisions and adjustments, no doubt. But I mean, let's just take a quick look at what's happening, right? So like NQ 1 minute. Let me just turn this thing off for a second. Let's turn the filter. So what I used to do actually is I used to have all the filters on at the kill zones, and I just had it just so I could go back and I could see what happened when I wake up. And this is like a study thing, right? This is another reason I like this indicator, because it's already going to show me things from the past that I can then study. But since then, I feel like I've done all the studying I need to do. It's just, it gets to a point where it's overkill. But I'm sure, the opportunity is there for me to turn back on and I can use it, right? It's not a big deal. But let's turn on the afternoon session there. And, one thing I have set with that indicator is it will only trigger off like alerts to me if hourly liquidity is swept. So if hourly liquidity is not swept, it's not going to tell me what's going on. So if we look here, you all know daily EQ is a very important level for me. Look at what's happening here. Look at what's happening. You could totally trade this. It's inside the afternoon kill zone. It's reacting very, very aggressively with strong momentum off of the daily EQ and confirming an IFEG here, right? This is like a bread and butter play. Bread and butter play. It's possible, man. It's 100% possible. Your entry right here. Your stop loss, well, your stop loss could go at the top, 22 points. You could go lower. For me, I probably would have just kept it at the top. And then, in terms of TPs, there's one right there. Right? There's one right there. How many points is that actually? Let's just take a look. So that's about 13 points, 12 points. I probably wouldn't have taken it there. I probably would have stretched it to about at least 20, right? So somewhere around here, I probably would have been looking for something. Maybe about here, because there is an FEG here. So this would have been, maybe like I would go to break even here, but then my first TP would have been about here, right? And then the second TP could be like right at that swing point. And then the third TP can be like here, right? So you'd have like a runner open and you just let that thing go and you see what happened. Ali missed it. Oh man. Oh, you should have alerted us, man. Should have alerted us. We could have watched it. That was not even that long ago. 14:11. 9 minutes ago. So another thing that I like to use that I'll also share is I use EMAs. And the question is, why do I use EMAs? Well, the reason I use it is because when I'm in a trade, like let's say I'm in this trade, I know the best setups are going to show that price is respecting these EMAs in whatever direction they're going, right? So this obviously is showing us consolidation, right? These EMAs are bending tight, they're squeezing, they're compressing. Usually a big move happens when you see something like this happen, and then sure enough, here's your big move. But what I want to see if I'm shorting is obviously I want to see price like break through all of these, and the faster all of these MAs or EMAs can flip their order, right? So that means the 200 EMA is going to start breaking through all these EMAs. Then that's showing me that, okay, this trade has legs. And how does it have more legs? Well, how does it react off of these levels, right? So if I just go to the ribbon for a sec. So I have the 8, 13, and the 21 on, right? Let me turn off these for a second. So here's 8 and 21, right? 21's way up here, which means price could definitely come back up here, right? Of course, it could definitely come back up here. But by having these other EMAs, I can see how price is reacting, right? Think of this as like, like a first flag alert. So if price starts to break above this, then I can anticipate that it's going to tag the second one, which is the 13. If price breaks above the 13, I can anticipate that it probably is going to tag the 200 and the 21, right? But at that point, at this point, I would have already taken 2 TPs here. Stop loss would have been probably I would have been trailing it probably. I wouldn't have just kept it here. I probably would trail it. But then I would just watch how price reacts to the EMAs. The EMAs are there to help guide you as a trend. That's all it is. And I used to trade with them a lot with crypto years ago when I was learning, simple things, 20 and 50 cross, right? Like at a higher time frame POY type thing, right? Like at an H4 or a support level or supply and demand, whatever you want to call it. But I would look for things like that to happen. Moving to present day, I'm using it to just watch the trend, really. So as I'm in a trade like this, I can see how that momentum is playing out. And, it's not perfect. But when it is perfect, it's like, and you can see it in hindsight, it's like flawless. And you just like think to yourself, man, that was beautiful, right? Like, look at this. Look at the respect showing you the trend, right? And then price breaks above, flips the MAs. And when that happens, when you start to see a distance between these faster moving moving averages separating itself from the higher moving averages, the slower moving averages, which is the 200 turns into like a magnet. Price will immediately gravitate toward it to rebalance itself. So if I am like trying to catch that reversal and I see that there's that gap, then that's giving me some sort of, it's giving me some sort of direction that it's like another way of using draw on liquidity. Let's just put it that way. So you can see here, price flips those MAs or EMAs, flips it into support. The trend is now super strong, right? Because these three lines are now, pretty adjacent to each other, right? Or is the word parallel? Probably parallel to one another, right? They're moving in a straight line, kind of not so equally, but pretty close. And then it tags it right there. And then you get consolidation, right? Now on the flip side, price is doing the opposite. The question is something like this going to happen going the other way? But we know that if you're trying to trade something like this, your entry's here and your couple TPs and you have a trailing stop loss and, like I would have had my stop loss above the 200, let's say, right? Just in case something crazy happens, right? And then your third TP is right here, and that's like almost a 3-hour move, like full move, and that's like 66 points, right? People used to always say that, right? Like you only need 40 to 60 points to be profitable with NQ. Like that's all you need. And I never understood it until I started to switch over to IFG trading and really resonate with it. Like it resonates with me, and I then started to understand the whole idea of those points. So just some tips there. EQ is by far my most used and favorite tool aside from standard deviations. Yeah, standard deviations are beautiful, man. And if anyone doesn't know, like there's a few ways you can do it. If you're trading like with breaker blocks for unicorns, you would then anchor the in this case, if it's a short, you'd anchor your swing high to the breaker block low, right? So something like this. Let me just get my settings. I use 0, 1, obviously, for the anchors, but then -1, -2, -2.5, and then -4 and -4.5. So the idea here is this is your consolidation. You start getting here. This is your expansion into your first TP. If price starts to accept typically below this, you can then start to anticipate a move even lower. So this can give you those projections. Just a little tip there in case you don't know. Another way that people use this is the way T-Trades uses it, where if you've ever seen his indicator, it's all measured off the change of state delivery. So he's marking it off the CISD, and those levels then start to adjust, right? Because I moved it up. So those levels are going to move a little bit higher. So, I mean, there's a couple ways there to do it. Use them to your advantage. I know the way Matt uses it, he uses it with the breaker block. I personally like to use it that way. I find that price does have more reaction or accuracy, right? Like look at the -1 here. Ping, reaction. That's showing you that there is something to this placement. 1700 says, would it be beneficial to add EMA to a breaker block FVG strategy with equal or with EQ and standard deviations, or is it at this point useless or pointless? Excuse me. Once again, I just go back to my tweet, man. Like less is more. Less is more. Like if you're gonna, I mean, anything's possible. Can it work? I suppose it could work. I mean, you're probably gonna have to test some things out, but I would just say like less is more, man. Like you don't need so much confluences to make a trade work, unless that is what you want to do, and there's nothing wrong with that. But just make sure that that is comfortable for you, right? Why not use change state delivery instead of EMA bands? So, change state delivery just gives me a level, and yeah, I can use the standard deviations, but I actually want to see what price is doing in between those standard deviation levels, and that's where these MAs start to come in, right? All of this, I can start to see what's happening. If we're looking at the way T-Trades has talked about C3 expansions and like how to look at that, his whole thing, what I learned is like, price will come down, it will retrace, and then you have an order block, right? So like right here, you have an order block. Price move lower, reacted off of it, right? Is it going to respect it or is it going to go lower? But that's pretty good. There's an order block there. If price goes even lower now, well, we now have a new order block, right? Or he might even place the level here. I forgot what he calls it, but an opposing something. I think that's what he was calling it. I can't really remember, but I mean, order blocks at the very least can tell you a lot, right? Like I just put that there, that one little box off of this one level, which is that small retracement, and look at how much it's look at how much information it gives us. So much. So yeah, it's like a guideline, right? It's like a map. That's all moving averages are. They're just trend. It's all trend based. So if I'm trying to gauge how strong the trend is, if I'm in a trade and I want, obviously in this case, let's say I want the price to go lower, I can use this to gauge the trend. It's not going to be 100% perfect, but it's a way to gauge the trend, right? I can also use an order block here and just avoid all of this, right? And just simply say, well, hey, if this thing goes up like that, reclaims support, then there's a good chance it's going to do this, right? Or if it rejects again, right, then there's a good chance that we're going lower. So it could be one of two ways. Maybe it consolidates here, but at some point it's going to have to make a decision, right? So your thing would be, when has it actually disrespected our EMA, and when do we consider leaving this position? Well, once again, that is a risk-based question. That's a strategy-based question, and I would not use the EMAs or MAs to make that kind of a decision. So I know I just said earlier, if I was trailing this position, right? Because like I've already taken, like hypothetically, I've already taken 2 TPs. My stop loss, which is now supposed to be a break even, like I'm not going to keep it here. I'm going to trail it lower. But guess what? I'm going to trail it above the 200 EMA, like right here. That's how I would use those EMAs, right? Because I don't know what's going to happen here, right? And I'm not going to exit the trade unless I really want to, and I'm completely, like, I mean, that's the other thing. Like if you're completely content with the 2R here and you've already taken off a massive amount, or maybe you haven't taken a massive amount. This is why I like to at least have, 75 to 80% of the trade already taken off here, right? Like I would literally only have a runner going here. So it's that one runner is like inconsequential because I already took off so much of my position. This trade is a risk-free trade. It's a winner. I don't have to stress, right? That's the issue with holding positions for 2R is like whatever happens in between your entry and 2R is a roller coaster ride, right? Like we showed with that CL setup. So I hope that helps, bud. What EMA levels am I using? So this is it. I use this MA ribbon, and these are actually, I'm using SMAs here for some reason. Let me switch this over to EMAs. Okay, there. EMAs, and EMAs. I think I had it set to slower moving average because I just wanted to be sure. Because sometimes I notice with the exponential moving averages, price will like sweep above it and then show that it's like holding it. Whereas with the slower moving average, the lines are placed a little bit away from from where that EMA would have been. So then if price does actually start to close above it, well, then you're already getting proper confirmation that, you're going to see price move higher. So this is exactly what I was talking about, right? First line of defense, it breaks, tags the second line of defense. Price breaks above that second line of defense, it goes to the third line of defense, which is that third line, our 21 EMA or MA. And then here's your 200. And that breaker block, like I said, is it going to hold or is it going to be flipped into support, right? So a lot of different concepts. You don't have to make things so confusing. I know I'm expressing a lot of different types of analysis here. The only reason I'm kind of expressing a lot of it is just to show you the possibilities. I think it's up to you to kind of figure out like what you like the best and like what you can make work for you. But ultimately, at the end of the day, you'll typically see me have literally none of this on my chart. Even the standard deviation, which is a great tool, I won't even have it on my chart. This, like literally, this is it. This is all I will have on my chart. So it's nice and clean, super small. SMA just means a simple moving average. It used to just be called moving average on TradingView, and then they changed it to SMA, like officially simple moving average. So simple moving average is just like a slower calculation of the line, whereas the exponential moving average is like a faster calculation. So you'll notice the lines will differ, meaning that the lines will hug the price a little bit more aggressively if it's an exponential moving average. But one thing I learned from a classically trained, I say classically trained because there actually is something called that, like a classically trained market technician or chart technician. There's like certifications. I was studying off somebody years ago when I was trying to learn about MAs and EMAs, and one thing that they always talked about was if you're trading on a lower time frame, use the EMAs, and if you're trading on a higher time frame, use the slower moving averages. That came from someone very theoretic, but ultimately there's no right or wrong way, right? Like you follow what price is doing the best, because price is going to do whatever it wants, right? And just because one person says something doesn't mean that's the right way or the only way. So always think outside the box that way, Trading is all perception, and getting somebody else's perspective can help break you out of that box you protect yourself with. Yeah, man, that's pretty deep. So while sticking with your foundational strategy, these sessions are great, and I'm glad to be back. I appreciate it, man. Appreciate the positive words. I appreciate the insight, and appreciate you being here, man. Thanks for being here. Thanks to all of you for being here, really. What are we at? We're at 2:35, and let me see. Did I cover everything I wanted to cover? We did NQ, we did GC, we did CL, and then we're kind of watching this thing, which is, we talked about strategy with gold during Asia. I mean, that's pretty valuable. Mickey, thanks, buddy. Yeah, you know what? CL definitely has a safe place in my heart too, man. CL gang. We had a CL gang going on in Unicorn University last year, and it was really in effect. I think it would have been, definitely last year. And a lot of us were trading CL, and it was just scoring win after win after win. Like, it was amazing. We would all be like celebrating because it was like NQ was doing nothing. So it was like really nice to see something like another asset have opportunity and trade really nice with the price and give us something. So that was cool. But ever since then now, it's just about tightening things up, tightening process, realigning, a bunch of different things to, work towards that end goal, right? Our end goal has to be about getting that withdrawal, has to be about risk management, has to be about paying yourself, right? Your time is very valuable, so make it count. Does anyone have any other questions? Yeah. Oh, 17, man. That makes so much sense. It moves so much more cleanly compared to Forex. Holy crap. That is an understatement, man. like Forex is out of control, man. And, I guess that kind of segues me to Forex. I might as well just quickly talk about it. So I do post setups and things I'm doing with EU. So I am using a CFD prop firm with this, the Fivers. I think it's called the fivers or the 5%. I don't know why I think it's 5%ers, but I think it's just called the fivers. I used them a long time ago, and then I just during Christmas or Black Friday, they had such a great deal. I was just like, oh, you know what, man, I'm going to pick it up because I was backtesting EU across all of 2025, and the way I was looking to trade it, the results were just fantastic. So I got that account, I started trading it. So I've been trading it, and I've been posting my setups inside the Forex thread inside AshCap. So check that out if you want to get a closer look of what I'm doing. But the reality is these are swing trades. I use the daily time frame. So this is a completely different setup, okay? It has nothing to do with IFEGs. I can quickly talk about it. Maybe down the road I'll get way more into this. Yeah, support and resistance on XAU. Let's go. April 2025. Oh my God. Okay, yeah. Spreads. Oof. Now I know why you have that gift there. Thanks for sharing. Elise says, just one more thing, psychology-wise. I recently got funded with IFEG setups. I haven't got payouts yet. Any advice for a newbie? So I guess the first thing you got to do is you got to get to a buffer, right? So if you're trying to get to a buffer, I mean, don't change what was working. Like if whatever steps you took to get funded with the IFEG in the first place, like keep doing that, right? But be more patient. That's the only thing I would say is be more patient with your setups. Like, don't force the setups. It is okay to miss setups. I would also, restrict myself to like 1 or 2 trades tops, right? You get one win in the day, stop. So keep building the buffer. And then when you get to a point where, you're in a good position, then you can start to withdraw. But the whole thing is you can't change what was working in the first place. A lot of people I talk to or that I've just kind of see who have expressed their frustrations, they've often said that whatever they were doing to get funded, they for some reason stopped doing that after they got funded, and then they would blow their account. And I can't tell you how many people I've seen say this. So I would just kind of say that back to you as the answer of don't change what you're doing. Keep doing what you're doing and double down on it. But at the same time, just understand that you don't have to be as risk, you don't have to take as many risks as you might have taken to get funded. Because usually when you're trying to get funded, you'll take extra risk because you're just trying to pass that account as quickly as possible, right? Especially if you're not doing like one shot, one kill type stuff, right? And you're trying to pass it like traditionally. Then you're increasing your risk per trade, for example, right? Like you wouldn't increase the risk of your trade on a funded account. You'd only do that on a challenge account, right? So it's things like that. That is absolutely hilarious. Overconfidence. Yeah, we got to be humble. A lot of us have different ways of battling that. Like for me, it's faith in God. I just thank God every single day for everything that I have been given and everything that I'm able to do for my family and my friends and people who are in the world of the internet, right? Like all of you fine folks. Like I'm just very grateful, and I think it's important. Like I start my day thanking God. I ask God for help throughout my day. At the end of my day, I'm once again surrendering to God, and I think that's that's been a really powerful way for me personally to remain humble. So it doesn't work for everybody. I'm not saying you have to believe in God or that you have to be religious. I'm not going into that. I'm just trying to say this is what I'm doing, and I have found it has really helped me tremendously. So if it does align with you, give it a try. Yeah, amen, man. He says, that makes sense. I feel like I'm too careful with funded trades, so I got another eval and started trading when the markets are not ideal. Now I'm up on my eval and I'm in drawdown on my funded. Yeah, it's a slippery slope, man. It's a slippery slope for sure. Exactly, 1700. Exactly, man. Exactly. Master plan. Master plan. All right. Well, let's quickly talk about EU and then we'll wrap it up. So once again, I trade EU. I only use the daily time frame, and I execute on the hourly time frame. So all I'm doing is I'm looking for daily levels of interest. So let me just see if I get my little cheat sheet out here. Yeah. So when it comes to the hard time frame levels, I'm looking actually not just at ERLs. I'm also looking at IRLs. But if I'm going to start, trading with IRLs, more specifically, I use the monthly EQ as my line in the sand, right? So it's like anything above is a short, anything below is a long, right? It's like kind of like filtering out for bias, similar like I was doing with NQ. So once price kind of tags a level of interest, so like let's just go back for a sec because this trade actually played out really nicely. So we're above the monthly EQ. There is a super, super small FVG here on the daily. Okay, go to the hourly, and okay, so it's this right here, super, super small. Okay, but here's the setup. Okay, you have to promise you won't tell anybody though. Okay, my setup is wait for the ERL or IRL to get tagged on the right side of premium and discount. Then on the lower time frame, which is the hourly time frame, I want to see a liquidity sweep like this. Okay. Then I want to see a change in the stated delivery. Like this. Okay? And the last thing I want to see that confirms my entry into the position is a close below the 20 EMA. Or was it the SMA? I think it's the EMA. Yep, EMA. So I want to see that happen. The second price closes below the 20 EMA, because I want to short, that is a market order entry right there. Okay? My stop loss goes at the swing point. So it's extremely mechanical. And I've kind of back tested, like, do I skim profits? Do I just take 2R off the table? And what I kind of got to was to just take 2R and be happy, because and this is the setup, and I took this setup, and I actually shared this setup for everybody too. So this is my model of how I trade EU in a nutshell. This is it. I just walked you through it. So those are the steps. Higher time frame POI on the daily, could be an ERL, could be an IRL. I want to make sure it's on the right side of premium and discount. Once that happens, I go to the hourly time frame. I'm looking for a liquidity sweep. I'm looking for a change in state delivery. And then my final trigger in this case is I'm looking for a closure below the 20 EMA. Once I get that, market order entry, stop loss at the swing point, aim for 2R. Or the nearest drawn liquidity. Here, you know what I'll do for you? How does that look? Take a screenshot if you would like. Like I said, I'm sharing these trades that I'm actually taking inside of the Forex thread. I do have a journal I've been keeping. I'm not gonna share it though. So, but the reason I'm just saying this to you is because I did share it with the premium side, but I'm showing you what I do. So you can just go back and back test this for yourself, and you'll see how you do. I don't move my stop loss to break even. It's like set and forget. So once I put that in, that's it. The trade's on. And then once it's over, it's over. So now prices moved to a daily ERL. And we're on the right side of premium and discount. And we got a liquidity sweep today off of that 10 a.m. rogue candle. So now all I do is I mark the CISD and I have an alert set there. So the second it gets tagged, I'm going to be alerted, obviously, and then I'll know, hey, I got to keep an eye on a closure because the 20 EMA is way down here. So if price is going to close above the CISD, it's going to obviously close above the 20 EMA. So I have to make sure if price does close here, I get my entry. This might not work, but this is part of the game, and it's a swing play. Why am I doing this? Well, I like to diversify. I love trading. I'm very passionate about it. I'm sure you guys can all tell. But the thing is, like, I want to have my eggs in different baskets, right? And I don't mind having a swing position. Now, you can only do swings with CFD prop firms. You can't do this with future prop firms, as far as I know. So my position's opened on MT5 when it's ready, and it just plays out, and it takes as long as it takes. This trade, let's see how many days it took. It took 2 days, almost 3 days to play out. Sometimes entries are going to happen during the day, like New York. Sometimes I'll wake up in the morning at 6 something in the morning, and I'll look at my phone, and there'll be a setup already playing out. So things like that can happen. Sometimes TPs get taken while I'm sleeping or in the middle of the night. That's happened. So it's a swing play. You have to expect that. But like I said, it's a set and forget approach. I gave you what I'm doing. It's all here. Backtest it for yourself. And like I said, I'm sharing these trades inside of the Forex thread. So it is there for you. All right. So let's end it there. Appreciate everybody's time today for sticking around. We're almost at 3, so almost been doing another 2-hour session. Really appreciate you guys, and I'll get the recording shared. I still have to share yesterday's recording. Got to talk to White Chocolate, see where we can put that thing. But I have uploaded it to YouTube already. It's just private at the moment. But yeah, look out for that. And if you have any questions, once again, just feel free to DM or drop it in the Gen chat. You can tag me anytime. It's all good. No stress. And yeah, appreciate everybody. Thank you so much. Peace out.